Hello, welcome to this week's Forex Outlook here at xm.com. I'm Rafi Boyajan, currency analyst, and here with me is our chief economist, Michalis Florentiadis. So, Michalis, it's been another turbulent week for equity markets. We saw sharp losses both in the US, Asia, and Europe as well. Currency markets, perhaps you could say they were relatively steadier, though we did see some fresh lows for the euro, the pound, the Australian dollar. So, what was driving that panic in the markets?
Yes, I think it was a confluence of factors that were driving these concerns. On the one hand, we are in the middle of earnings season in the United States when companies are reporting their profitability, and investors might be a little concerned that this is as best that it would get with respect to profit growth. So profit growth is set to slow down, although it's still going to be positive, which is no easy thing, but still investors might be a little worried that valuations are a little bit high. Also, we have some geopolitical uncertainties in the face of trade wars. Maybe China is slowing down. We also have in Europe uncertainties regarding Brexit and what is going to happen to Italy and its budget. So I think these, and of course, the Fed is continuing to raise interest rates. So all these acted as a brake on markets, and we did see quite a steep sell-off. It's very interesting to see who benefited. So the main beneficiary was the Japanese yen, although you were also right, Rafi, that the moves we saw were not really dramatic in foreign exchange. They were much more contained. Also, the dollar was standing quite well. Maybe this is because of euro weakness and pound weakness, as we said. We respectively we had the Italian situation and the Brexit knocking down euro and the pound. So I think these were the main themes, the main worries. Although the impact must be said that the impact has been quite moderate. So given this, it was a busy week in terms of central bank meetings because we had the Bank of Canada, we had the ECB. Nothing terribly new came out of these meetings. I think they went as expected. We had the Canadian rate hike, and the ECB continuing is on course with its QE asset purchase program, and by the end of the year, and maybe raising rates next year. What do we have to look for next week? What's going to be important?
Well, we're going to have more central bank meetings. We have the Bank of Japan and the Bank of England. We're not expecting any changes from either central banks, but both will be publishing their quarterly forecasts, and that could possibly knock down the pound in particular if we do see lower growth and inflation forecasts as a result of that slightly worsening outlook for global growth. At the end, though, we'll likely continue to find support from safe haven bids. Perhaps more interesting will be the Eurozone flash GDP estimates for the third quarter, as well as flash inflation numbers for October. In the first half, Eurozone growth was at 0.4%. If we do see growth slowing down in the third quarter, that would raise further doubts about the ECB's plans to go ahead with ending QE and starting to raise rates in late 2019. We're also going to have the Australian quarterly inflation numbers for the third quarter. We could perhaps see the Aussie inflation dipping below the RBA's target band, the lower band of 2%. Plus, we're going to have some Chinese manufacturing PMIs. They've been hovering above 50 neutral level in recent months. We could perhaps see a contraction in October, and that could potentially weigh on the Australian dollar. After the US, we're going to have the non-farm payrolls report. We're expecting another solid month for jobs growth. Wage growth could pick up as well, but not. It's unlikely to reach 3% just yet. And we're also going to have the PC inflation numbers as well out of the US, which the Fed monitors very closely.
And all this is well and good. Of course, the economic data as well as the central bank meetings, but we should also keep in mind what is going to happen, particularly with the Italian situation with Brexit and, of course, the stock market sell-off. We do have very important earnings also next week, so it will be very interesting to see whether risk appetite stabilizes. But I suspect that this volatility we are seeing is not something that is going to be switched off instantly, that it could be with us at least for a few more sessions, so volatility tends to stick around for a little while, and this could have, of course, a significant impact on foreign exchange, or even bigger impact that it had so far. We'll have to see. So thank you very much, Rafi. Thank you everyone for watching, and have a great day.